Okay, guys, we're going to get started since it's 4 o'clock. Thank you for coming. Welcome to open enrollment. This is that one time every year where you can make changes to your benefit elections. So you can decide that you want to enroll in the plan, you can terminate your coverage, you can switch plans, maybe you want to add your dependents or remove them from the plan. This is that time of year that you can do that. The only time outside of open enrollment that you can make a change is if you have a life event. So if during the year you get married, you have a baby, you get divorced, maybe your spouse loses their coverage, if stuff like that happens to you throughout the year, you have to notify HR within 31 days so we can get your benefits updated. So for the agenda today, the first item that we're going to talk about is we are actually moving to a new life and disability carrier. Currently, your life and disability is with the Hartford, but starting on July 1st, we are moving to Mutual of Omaha. We have Noah here today, who's going to talk about the voluntary life insurance that is available for you to purchase. This is really important this year, but because we are moving to a new carrier, we are opening up the guaranteed issue amount. So what does that mean? That means that you can purchase additional coverage up to a certain threshold without any medical questions. And Noah's going to go over that in more detail in a little bit. The next item is we are actually changing to a new health savings account vendor, or HSA. We are moving to Optum Bank starting on 7/1, and Dave Houston is here from Optum who's going to go over those specifics. One of the main reasons that we are moving to a new vendor is because we have had a lot of issues with Highmark this past year. So we think that making this last move to Optum, you're going to find is going to be easier to use. You're going to be able to pay your claims. You're going to be able to reimburse yourself and invest your money easier than what you can with Highmark. And he's going to go over those specifics in a little bit. We're going to briefly discuss the healthcare plans. There are no changes to them. We're going to talk about the dental and vision plans, which again have no changes. I'm going to touch base upon the flexible spending accounts, or FSA. We're going to go over the spousal carve-out rule. We're going to talk about how do you enroll or make your changes for the upcoming plan year. And then last but not least, we're going to talk about the BRC, which is the Benefit Resource Center. So if you have questions about benefits or eligibility, you can call the BRC that can help you. So I'm going to turn it over to Noah from Mutual of Omaha.
Alrighty, well, good afternoon, everybody. My name is Noah Beacons. I'm a benefits specialist here today with Mutual of Omaha. I'm just going to be going over the entire voluntary life benefit that's available to all of you for, optional elections. So today, with that product, I'm going to be going over, the need for life insurance. Why do you need it? How do you sign up? I'll get into that towards the end. Why you should sign up now compared to maybe 6 months down the road or next year, and then also who can you cover. So I'll go through all those details. I'll answer any questions you all have today, and I'll also leave my contact info at the end in case you want to reach out at a later date anytime. I want to make sure that I will be able to answer any and all the questions that you do have. So the need for life insurance. There's a lot of different aspects that can go into this that could determine why it may be a good fit for you. But some of the key points that would really be a big trigger would be if you're married, if you are a single parent, or if you have children at all, if you have a stay-at-home spouse, if you're planning for retirement, or if other people in your family depend on you for your income. Those are all different needs, and there's other things as well, such as wedding planning, just leaving money behind for the family, and just making sure that if you have a mortgage, if you have debt, whether that be credit cards or student loans. Unfortunately, when we do pass away, those things don't entirely go away, and so you want to make sure that you do leave enough behind for whoever is left behind to take care of those expenses and make sure that they can go on living their lives as if a financial burden did not just happen. So with that, with this voluntary life insurance product, we are offering it on a true open enrollment. So what that means, and I cannot stress this enough, is that there is no medical questions whatsoever. This coverage up to the first 100,000, or excuse me, up to the first 250,000 is entirely guaranteed with no questions asked. That means if you have any sort of medical condition going on right now that can make it difficult for you to get coverage on the market, whether that be through an Allstate, through a State Farm, through another provider, they would usually 10 out of 10 times, they're going to have you go through medical questions if you want to get life insurance, especially if you want to get them out of this, this stature, of this amount, of this high, of 250,000. So right now, during the initial open enrollment, it's entirely guaranteed. And that's the most important thing, because if you do decide to sign up later on down the road, whether that be in 6 months or next year, that's great, and we'd be happy to have you then too. But please note that you will then be subject to those medical questions, to the blood work, to the possible urine work, to meeting with the physician. So please keep that in mind, that right now it is guaranteed. So it is going to be pretty easy. It's going to be through an online benefit portal, and we'll get to that in a few moments. But all employees, one way or another, must elect coverage. So if you're going to elect it, you must elect it. If you're going to pass on it, you must click decline. So we are asking that you do make an election one way or another. That way we do have it on file. And you're going to be doing that online through the benefit portal. And again, I'll get to that in just a moment. That email with the login will come to you on Monday, so just a heads up there. But we'll come back to that in just a minute. So as I mentioned, 5 times your salary, up to $250 is entirely guaranteed. Of that, though, you can keep going over that to the maximum of $500,000. 5 times your salary is your own personal max. $500,000 is the maximum for the entire group. But $250, keep that in mind, that $250 is entirely guaranteed. On your spouse, their maximum is 50% of whatever you elect on yourself. So if you elect $100,000 on yourself, the spouse maximum is $50,000. But for them, their maximum is $250,000, and their first $100,000 is entirely guaranteed. So if you wanted to get $200,000 on yourself and $100,000 on the spouse, you could do that with no medical questions whatsoever. So great opportunity to get the spouse coverage if they have anything going on medically at home. To give you an example of how important this really is, a few months ago I was doing a very similar meeting just like this, going over the same voluntary life product, and a woman came up to me afterwards and asked if she was able to get coverage on her husband, who had just unfortunately been diagnosed with a chronic disease. Really, really unfortunate situation, really, really tough to hear about, but because he was still moving and living his life, he was able to get that life insurance coverage entirely guaranteed with no questions asked. So definitely recommend, thinking about that because it is important and it's a great opportunity. Lastly, coverage for the dependents, for the children, $10,000 of coverage on all of them, and the cost for that, which we'll get to in a moment, covers all the kids, no matter how many you have. This also includes portability and conversion. So what that means is if you were ever to leave here, you can take this coverage with you. Portability keeps it on a group term life basis, and conversion converts it to a whole life policy. And then there is also the annual increment provision. So this is extremely, extremely important to note, and I bring it up for a few reasons. First of which, this is the simplest way to increase the amount of insurance that you put on yourself. So what this does is every single year, as long as you enroll during the initial open enrollment, every single year you can increase it by $10,000 with no questions asked up to that $250. So it's great if you don't want to do that full $250, you want to do maybe just like $100, get your foot in the door, have it something, or maybe even just like $50 or $70. Then next year when enrollment comes around and you realize that the finances are working out a little bit better for you, you could definitely increase it at that time. I also bring it up because it's a great opportunity if you're on the fence. If you're thinking, I don't know, do I need this coverage? Do I really want this coverage? With this provision in there, as long as you enroll and get the minimum $10,000 on yourself, as long as you have that minimum $10,000 on yourself, this allows you to increase it every single year by that $10,000. Again, this is only if you enroll during the initial open enrollment, so as long as you get your foot in the door between now and the end of May, you'll be able to utilize that. If you wait and want to enroll later on, please remember that you will be subject to EOI, evidence of insurability, those medical questions, and you will not be able to have all the provisions that you would if you enrolled during the one-time open enrollment period. So how much is it going to cost, and how do you enroll? So for example, for the cost, right here's an example on the screen. If you are 42 years old and you want to elect 100,000 on yourself, so you don't want to do the full 250, but you want to get something, you get 100,000 on yourself, 50,000 on the spouse, and that 10,000 for all the kids. The total cost per pay, so every other week, would be $7.13. That's it. I know, right? Yeah, it's awesome. It's only $7.13. To put that in perspective for you, to give you a different, way to look at it. If you go to McDonald's right now, you can get a Big Mac meal for the same price, or maybe like 20 cents less. It's kind of ridiculous how affordable this really is. Great opportunity, but putting things in perspective for you. Looking at that dot number 2, if you want to do the full maximums, and you fall into that age range there, that 40 to 44, that 250, the 100, and the 10,000 is going to be $16.37 every other week. Now, this is going to be, biweekly, and that will be, taken right out of your paycheck, right out of payroll deduction, so you won't have to worry about writing Mutual of Omaha another check or, going online and making a payment. It's going to come right out of that. It's super easy, super simple, and pretty affordable. Putting the full maximum amount in perspective for you, you could go to the movies for 2, it's going to cost more. It's crazy, but it's here, it's now, it's affordable, and it's guaranteed during this one-time open enrollment period. Quick note with the costs, if you want to let coverage on your spouse, you must get coverage on yourself, so please keep that in mind. Same for the kids. And then it goes in 5-year age-banded rates. So every 5 years, the cost will increase. So 40 to 44, you're going to pay the same rate every single pay period. And then when you hit 45, it'll increase. It'll go to that next bracket. And those are all broken down for everybody in these packets, in these voluntary term life benefit summaries. You can see the exact cost for every single age and every single amount. They're all listed right in there. And if you have any questions on them, I'd be happy to work with you through those. On the lower parts of the screen here, though, right in this area, this is what the email is going to look like on Monday. You guys are going to receive this email on Monday. It's going to have, your info. You're going to click on the link here. You're going to go through. It's going to take you to this website right over here. It's super, super easy. It takes like 5 minutes. And remember, we do need you to go through this one way or another. We need everybody to go on, click their link on Monday, log in, create the little profile. Takes literally less than 5 minutes. Super easy, super simple, super quick. Fill out the info, and then please make an election one way or another. Again, this is guaranteed. It's available during this one-time open enrollment period, and it does not require any medical questions. I just want to bring that up again because I saw some more folks walked in towards the back, so please keep that in mind. It will also ask you to update beneficiary information or give you the opportunity to do so. Definitely recommend that. Cannot stress how important that is. Using an example, real life, this happened just recently. I was doing a meeting like this for another group over in Asbury, New Jersey, and the HR rep there told me a story of how the employee there who was married in the past had gotten a divorce. That happens, that's life, people go their own ways, that's fine. However, the employee never updated their beneficiary. They passed away 6 months later. All the money had went to the ex-spouse. The employee had a whole new life, a whole new, thing going on. All the money went to the ex-spouse. She took it, did not even pay for the funeral. It's really unfortunate. It's tough. It sucks. We don't want that to happen. We want you to make sure that if you do elect these additional coverage, the money goes to the right place. It's about you having that money, leaving it behind for those people so they can use it. Please make sure it gets into their hands. Now, I know I went through a lot of information today and rather quickly, and I know that some people were not able to attend today. So if you have any questions about the voluntary term life product, please do not hesitate to reach out to either myself, Noah Beacons, at 616-719-6688. That's my cell phone. Please shoot me a text, give me a call, leave me a voicemail, whatever is best for you. I will get back to you within 24 hours, one way or another, giving you an answer to your question or letting you know when I will be in touch with you. And if you want even quicker response, if I'm not available for some reason, please reach out to my counterpart, Josh Cady. He's also with Mutual of Omaha, and that's his cell number up there, 484-268-4176. Now, if you have any questions about the online portal, about that link and login, those are all going to be going into HR. So with HR, you're going to call them at 717-291-6141 for any portal, any benefit like login related questions, anything related to the voluntary term life, the product, the benefit specifically, please come to me or Josh. Are there any questions here today, though, before we move on to the next? Yes. Age for the child, great question. Dependent coverage goes up to age 26. Yep, thank you. Yep. Yeah, so if anybody didn't hear what she just asked, if you have this coverage already in force, if you have anything existing, that's going to roll over, that's going to stay in place, and then that'll be updated into our new system. Is there anything else you wanted to add on that? Nope. Okay. Any other questions? Nope. Okay, at that point, turn it over.
All right, so I'm Dave. I work for Optum Bank. We're going to be your new HSA provider, but remember that doesn't go effective until July 1st. So a little bit about Optum Bank. We're a bank just like the bank that you guys have worked with in the past. Similar to a bank you might have a checking account with. The difference is we're a bank that solely exists for this purpose. All we do is health savings accounts, so we don't have branches or anything like that. But we do have roughly 145,000 people that work for Optum. All the advantages that you'd want with an HSA provider that is its own bank, like its own mobile app, easy to use website. Our mobile app and website experience are the highest rated in the industry. Those are some of the reasons the school district chose Optum Bank to be your new provider. So a few things to remember about your HSA. Anybody heard triple tax advantage? Does that sound familiar? Yeah? We'll pretend like it did, right? So that means money goes in tax-free. So that means both the money from the school and additional deposits you make to your HSA go in without paying taxes. Who knows what your tax rate is while the money's growing? How much in taxes do you pay? Zero. That's right. Yeah, good job. Yeah, zero. So you're not paying taxes while the money's in the account. Now there's two ways to earn interest. It's while it's in the deposit or the investment account. Who knows how much in taxes you pay out when you use your HSA on medical expenses? Say it out loud. Zero. Yeah, you guys. Yeah, you know all the answers already. Yeah. So as long as you're using it for qualified medical expenses, money in tax-free, grows tax-free, comes out tax-free. Now, few quick non-qualified expenses: cosmetic surgery, right? That doesn't count. Big surprise. Electrolysis or hair removal, teeth whitening, any of those kind of things, and of course your over-the-counter medications. But all the normal things you go to the doctor for, eyeglasses, contacts that are for corrective vision, all your normal dental work, all that is HSA eligible. So let's talk about contribution limits. So contribution limits change every year. You guys have probably noticed they move up a little bit every year. So for 2019, the limit is $3,500 if you have individual coverage, so if it's just you on the health plan. If you have at least one dependent, that makes you eligible for family coverage. Now, keep in mind, that number has to include the amount the school gives you, right? So who knows how much the school's going to give you in your HSA this year? Good job, right? Yeah, so you're allowed to make up the difference. But there's a little bonus, too. Nobody in the room... Oh, yes, ma'am. Yeah. So you can make up the difference. A little bonus. Nobody in the room's there yet, but one day all of us will turn 55. No, you're not. Don't. No, you're not. One day we'll all turn 55. When you do, whichever coverage you have, you can add $1,000 to your limit. So if you had individual coverage, it'd be $4,500. Family coverage would go up to $8,000. That's your nice little catch-up contribution, right? So getting back to a couple of the things that we do a little bit better than who you guys have worked with before, when you guys sign up for your benefits, or if you don't sign up and you just stay on the qualified health plan, the one that comes with an HSA, that's going to set it up to automatically transmit data to Optum, and we're going to open the account on your behalf. If there are issues, we're set up a little bit different from your current provider, so we can work directly with the school HR staff to help get accounts opened. So it's going to make it a lot easier. We've heard about the issues that have been there in the past, and that's one of the reasons the school chose us, is because we have a reputation in the industry for not having those problems. You'll get an HSA welcome kit towards the end of June. So So you're going to get a nice, colorful welcome kit, and you'll get your first set of HSA debit cards in the mail. Those will be in a very plain white envelope. We don't want people to know you're getting a debit card, so be on the lookout for those two things. Once you get your debit card, you can register at optumbank.com for your new website access. You'll also be able to register with the mobile app. So you can go ahead and have the mobile app downloaded on your phone right now. You'll be able to register as soon as you get your card in the mail. So remember, that's going to happen late June. You'll get that card. Keep using your old card until you get your new card, and the funds from the school and your payroll deposits will start going into the Optum account effective July 1st. So, setting up contributions, the easiest way to get money in your HSA is through payroll. So, walk over and tell your rate. No, I'm just kidding. When you're going through your employee site, you'll be able to tell how much you want taken out of your paycheck for your health savings account deposits. Remember, you can't go over the whatever limit based on your coverage. And remember, all the money that you're putting in goes tax-free. The reason we say the easiest way to do it is through payroll deductions is because when it comes time to file your taxes, if you've done it through HR, the taxes are already calculated. You don't have to do anything additional. Now, you can go to optumbank.com, use the mobile site, whatever way is more convenient for you. You can do that to make extra contributions to your HSA. If you do that, it will trigger a tax form from Optum, and you'll have to remember to tell your accountant that. Otherwise, you're going to let the government get one over on you. You want to let the government get one over on you? That's right. No. But the school doesn't know that, right? So unless it's going in through payroll, they won't be able to help you out. HSA funds, remember, they roll over every single year. So everything you can save will be available next year and the next year and the next year. Who knows what happens to your HSA dollars once you retire? Say that out loud. He said they're yours, and that's exactly right. All of us, again, once we retire and go on Medicare, your Medicare coverage will be a little bit different from what you have right now through the school, but you will have health care costs. You can use your HSA dollars to pay for all of the things that you'd pay for right now, prescriptions, doctor's visits, all those things during retirement that will pop up. You can also use your HSA dollars to pay for Medicare premiums. So right now you can't use your HSA to pay for your health insurance premiums, right? But when you go on Medicare, you can. So even if you're like, well, I'm super healthy, I'm not even going to engage in the healthcare system afterwards, you'll still want HSA dollars to pay for your Medicare premiums. So just like your previous provider, you will get a debit card from Optum. You can order extra debit cards. If you lose your card, we don't charge to replace it. If you need spousal cards or dependent cards, you can order those online or over the phone. We don't charge for additional cards. We also have a very well-regarded, highly rated online banking bill pay system. So who uses bill pay through their bank? More of you do. You're being shy. That's okay. So you can go to optumbank.com or through the mobile app, and you can send payments to providers or however it is more convenient for you. But most people we know are using the debit card. You'll be able to use it the exact same way. It's accepted everywhere. MasterCard's accepted. Remember that MasterCard, because we're going to have a little bonus in a second. You can also use the Optum banking mobile app for all that. We also, we're the first provider to set up Apple Pay and Google Pay. So if you like that kind of stuff, get excited, because now you can pay your healthcare expenses that way. Another thing, reimbursement. Raise your hand if you have a credit card that offers rewards points. I know you do. I know you do. What I'm about to tell you is legal, and usually when a guy who sounds like me says everything I'm about to tell you is legal, it's not. Everything I'm about to tell you is legal. You are allowed to pay all of your healthcare expenses out of pocket with that rewards credit card. And immediately turn right around, go to optumbank.com or through the mobile app, and reimburse yourself for that expense to then pay your card so that you don't pay interest. If that sounds complicated, don't do it. If that sounds enticing to you, then that's easy. We do not charge. You can do transactions every single day. You can do it every single time you make a transaction. You can do it weekly, monthly, doesn't matter. What you can also do is, there's no statute of limitations on reimbursing yourself. So let's pretend you did that and you realize 2-3 months or even a few years later that you forgot to reimburse yourself. As long as you have the receipt, you can always go back and do that. We won't ask for the receipt. You should have it in case the IRS asks. The cool thing about the Optum Bank mobile app is, as soon as you open it up, there's a button at the bottom that's a camera. You hit the camera button. It accesses the camera on your phone. You take a picture of your receipt, and it's stored right there. See, they had to make it easy enough for somebody like me to use so I could explain it to you, right? So let's a couple cost-saving examples, right? Remember, everything that's going in is going in tax-free. So that really starts to compound when you think about 5, 6, 10 years from now, even into retirement, when you think about all those extra dollars. It doesn't matter how many HSA dollars you roll over every year. It doesn't matter how many you take into retirement with you. Every single extra dollar in health care means you're going to pay less in the future. So we wanted to show you a couple examples of just what would happen if you put the premium difference in, right? So actually the premium difference is even, if you just put the premium difference in between the high deductible health plan, and I think it's the green plan, you'd actually max out your HSA, so you'd save $560 in taxes. And we wanted to show you an example. The idea of HSA dollars is you can spend them as you need them. So what if you spent 1,000 of those dollars? You're not paying any taxes, right? Because it's all being used for qualified medical expenses. You're earning interest the whole time. You're not paying any taxes on the interest that you're earning. And in that situation, you'd roll over $2,500, right? So we put in $2,000 of your own dollars, and that's not even making up the difference in the premium. So you're still saving money per paycheck compared to the healthcare premiums. You ended up spending some of that money, and you would start the very next year with $2,500 extra dollars plus what the school gives you, right? So that's compounding every single year. Same kind of situation on the family. We showed you what the difference would be. The difference in the premiums is still less than what it would be on the most expensive health plan. You'd save $1,120 in FICA and payroll taxes. Family plan, you're probably going to spend a little bit more, so let's assume $1,500. You didn't pay any taxes on that money, so in that situation, you roll over an additional $5,500. So whether you're maxing out the plan or you're just adding a few hundred extra dollars, whatever money is rolling over is yours, and it's yours forever. Even if in the future, let's pretend 3, 5, whenever years from now, you decided to switch plans and you went on to a health plan with the school district that wasn't HSA eligible, these are still your dollars. You would still keep them. You would still have the account. It still has all the tax advantages. While you're on the non-HSA plan, you just couldn't make new contributions, but you could spend it. Good example is right now Medicare is a non-HSA eligible health plan. That may change, but right now it's not. You take your dollars with you into Medicare coverage, and you just keep on spending them. You're spending them tax-free. You just can't add to the account. Now let's talk about what the transfer is going to look like for those of you who are already in the HSA eligible health plan. Like I said, continue using your old card through June 30th or when you get your Optum card. Make sure you've got your Optum card. That's where the new school district funds and that's where your new payroll funds will start going on and after July 1st. So use your old card until then. We are working with your current provider right now to transfer those funds from the old provider to Optum as easy as we possibly can. But what's going to happen is once we know the new Optum accounts are set up and they're funded and everything's going the right way there, that's when you'll stop using your old card, and we're going to freeze those funds so that we can pick them up. You ever play claw machine in the grocery store? Right? That's the idea. Claw machine the funds up, pick them up, and put them in your Optum HSA. We're going to ask you to do as little as possible. We're still working through what the other provider is going to ask, but we're going to push them so that you have to do as little as possible to make this an easy transition. So what would happen is however long that period is for us to get those funds, whether it's 2 or 3 or 4 weeks, whatever that is, towards the end of July, you'll have all of your new Optum funds set up, new funds from the school district, and you'd see the funds from your old provider if you had any left over come over. Does that make sense? Any questions? Yes, ma'am. Yeah, that's a fantastic question. Good work out of you. So I went too far. So before I go any further, since I know where my slide's in now, what other questions do you guys have for me? None? Yes, sir. So, yeah, is it okay if I go with that one, or do you want? Yeah. So, and that's really no fault of the school district, right? So in the past, they were working with your insurance carrier, Highmark, and it wasn't the school district that kept changing their mind, it was Highmark. Every couple years, they were negotiating, and unfortunately, in the HSA industry, that's turned into a pretty typical norm. That's one of the reasons that your consultant team at USI introduced the school district to me, is because at Optum, we keep the HSA the same no matter who your insurance is, right? So the insurance companies over here changing their mind like they change pants, right? Every other week, right? They want somebody new as the HSA provider. The school district's turning that off so that they can choose their own. And the idea is it would never leave Optum. We have no connection to Highmark, so Highmark would never be able to kick us out. In the past, Highmark is the one who's changed their mind on HSA providers, and that's forced the school to change. So now the school is making this change because Highmark is contemplating yet another change in HSA vendor to keep you from having to go through that. Does that make sense? The other thing we're going to be able to do is, in the past, there were periods of time where you didn't have access to HSA dollars. Since they were thoughtful enough to think through another provider, we're able to work it out so that there's not going to be a period in time where you don't have access to your dollars. We are going to set it up so that we're in control, you, me, the school district, so that we know the funds are there July 1st, then we move your old ones so that you don't have a blackout period. Does that make sense? Good question.
My question is regarding the 65 age. What did you say at the beginning?
Mhm.
What would be the difference with the HSA?
So once you go on Medicare, either Medicare Part A or traditional Medicare, you can take your HSA dollars with you. You just can't continue to make contributions.
If you continue working for the district and you're not taking the Medicare,
If you stay working for the school district and you do not enroll in Medicare, you can continue with your HSA and continue making contributions.
you can even get the Social Security but don't take the Medicare.
Yeah. Social Security, that's a good question. Everybody here, she's asking about Social Security. Social Security and Medicare are two different things. Often they start together, but if you abstain from Medicare and do start taking Social Security, the Social Security part doesn't affect your HSA status. It's the Medicare that affects your HSA status. That's a good question. Does that help?
Like I can continue working with the district, getting Social Security,
Yes.
and continue the HSA.
As long as you don't enroll in Medicare, as long as you stay out of Medicare. Yes.
That's possible.
That is, yes, absolutely possible, yes. Good question. Yes, sir? Well, Medicare rates are like any other health insurance rate. They rise every year, just like health insurance rates rise every year. So in that sense, yes. Like every year when you, in Medicare, every year the rates this year are higher than what they were last year.
One thing that they told me is like the January 1st, you can even earn 46,000 and you are being no deducted. They are not the deduction from the salary till you earn 46,000 during the year, beginning next year.
Starting next year,
Yeah.
January 1, 2020,
Yeah,
they're going to do what now?
you can earn 46,000 during the year and there will be no deduction.
Oh, it won't affect anything. Yeah, that I'm not as familiar with. Yeah, but,
Somebody told me
yeah.
that the bill.
Oh, okay, gotcha. Yeah, I did not know that. Yeah. What other questions do you guys have? They had me worried. They told me you were tough. You guys are an easy crowd. Yeah. So you ready for me to switch it over? Now I'm done with my slides.
Appreciate it.
One more question. Maybe not for you or for the district.
Mhm.
That would be the contribution would be the same, like
Yeah, the contribution from the district. Yep. Yes, it has been the same for the past 3, 4, 5 years. So if you're an individual, you're going to get $1,500 from the district, and if you're a family, you're going to get $3,000, and they're going to put that into your new Optum HSA account. No. Mm-mm. As long as you're not on Medicare. Because as soon as you go on Medicare, you cannot have anything go into your HSA. That includes employer contributions. Okay? That makes sense? Yeah, you're welcome. So I'm just going to do a high-level overview of the medical plans that are available to you. These are the plans that we've had in place for the last couple of years, so they have not changed. I am going to start over here on the far right-hand side. Since Dave just talked about the health savings account, in order for you to have an HSA, you have to be enrolled in a high deductible plan. So under this plan, your individual deductible is $2,000. If you enroll as a family, that deductible is $4,000. I like to point out that on medical plans, the most important aspect is the plan year maximum. That's the most that you could potentially pay out of your pocket during the plan year. So your plan year runs from July 1st through the end of June. So once you hit that out-of-pocket maximum, the insurance company is going to cover your cost at 100%, as long as it is a covered expense. So if you stay in network, you go to the hospital, you're picking up prescription drugs, as soon as you hit that $2,000 or $4,000, they're going to pay the remainder of your costs for that year. As you notice, your deductible is the same as your plan year maximum. So as soon as you hit your deductible, you already met your plan year maximum under this plan. As we mentioned earlier, the district is going to continue that contribution. So if you look at it that way, you're really on the hook for $500 as an individual or $1,000 if you're in a family plan. And as you can see under this plan, everything goes towards the deductible. There are no copays. So every service you have done or every prescription that you pick up goes towards that deductible of $2,000 or $4,000. Any questions on the high deductible? The middle plan, your blue plan, is called the minimal deductible. Under this plan, as an individual, your deductible is $500. As a family, it's $1,000. Under this plan, your plan year maximum is $4,000 as an individual or $8,000 as a family. So that's the most that you could potentially pay out of your pocket if you enroll in this plan. As you can see, there are copays associated with this plan. So if you go to see a specialist, you're going to pay $35 at the time of service. If you go to urgent care, you're going to pay $35. If you go to the pharmacy counter, you're going to pay a copay depending on the type of drug that you take. So you're probably asking yourself, when does the deductible take place? Where you don't see any copays is what is applied to your deductible. So under this plan, if you go into the hospital, you're going to pay 10% of that bill after you hit your deductible of $500 or $1,000. That's the only time that those services will go towards your deductible. Everything else is copays. Last but not least, we have the green plan, or no deductible. It's exactly how it sounds. There is no deductible on this plan. But if you take a look at your plan year maximum, for an individual, it's $6,350. For a family, it's $12,700. So since there is no deductible, that means that there are all copays under this plan. The only way you're going to hit this plan year maximum is being copaid to death. Copay after copay after copay. That's the only way you would hit your out-of-pocket maximum under this plan. Any questions on these plans? Yes? Mm-hmm. This is Highmark. Yep. Everything under this medical plan, which includes prescription drugs, is Highmark. Hmm? talk to you after the meeting if that's okay, because yours is more specific in nature, so we can get more information from you. Is that okay? Okay, thank you. Any other questions on the healthcare plans? Very quick, your dental and vision benefits are not changing. We have a summary of these plans in your benefit guides, which I think I saw some of you have. They're remaining the same. They are actually a combined enrollment. So if you enroll in the dental, you're automatically going to get vision and vice versa. The amount that comes out of your paycheck for the dental and vision plans is not changing. It is staying the same for the upcoming plan year. So we're going to switch gears a little bit. We're going to go into the flexible spending accounts, or FSAs. And there are 3 types that are available to you to enroll in if you choose to do so. The first one is dependent care. This allows you to put pre-tax money into an account to help pay for your dependent care expenses so that you and your spouse can work. You are allowed to put $5,000 into this account. I know daycare is very expensive, so this may not seem like a lot, but because it's pre-tax, it does help you out in the long run. The second plan is your medical FSA. This helps you pay for expenses under your medical plan that is not reimbursed. You can also use it to pay for your dental and vision. The government did increase this, I believe, by $50 for 2019. So the most that you can put in is $2,700, and again, that's pre-tax money that's available to you. And you can use that to pay for your co-pays, to pay for eyeglasses, when you get some type of dental surgery, things like that. You can use your medical FSA to pay for that. Last but not least is a limited purpose FSA. These are for just those people who enroll in the high deductible plan with that health savings account. The reason why you cannot enroll in the medical FSA is the government says you cannot have both a health savings account with a medical FSA. They look at that HSA as for you to put as much money in there as possible to pay for all those expenses. So you're probably wondering, well, if I'm already in the high deductible plan with an HSA, why would I enroll in this limited purpose FSA? Because like it says, you can only use it for your dental and vision expenses. Maybe you have kids that are getting braces this upcoming year. This is just another way for you to save extra money to help pay for those expenses. So you can have both the HSA and this limited purpose, but you can only use this to pay for your dental and vision expenses. Does that make sense? Any questions on that? Spousal carve-out rule. If your spouse has coverage at their employer, they are not allowed to be on the district's medical plans. That does not count for dental and vision. They can come on to the dental and vision plans. It's just medical that they are not eligible for. But if your spouse loses that coverage, they can then come on to the district's plan. That is one of those life events that we did talk about earlier. So if that does happen, please notify HR within 31 days so we can get your spouse enrolled. So how to enroll? All enrollments are going to be done via your employee self-service starting on Monday, May 6th. So we are asking all employees to please log on, even if you aren't making changes. If you're going to just roll over what you currently have, please log on so we know that you want to keep your current elections. Voluntary life. Like Noah mentioned earlier, you are going to receive an email on Monday. It's going to be from Employee Navigator. We are asking that you do use that registration and log onto the portal so you can do a number of things. You can either elect voluntary coverage, you can keep what you currently have, or maybe you want to just waive the coverage in general. We are asking that you please do that because, again, we do want you to update your beneficiary information as well. because we want to make sure the appropriate people are going to get paid if something were to happen to you. And then you must elect your benefits before May 26th. This is very important. Like Dave mentioned earlier, if you are one of those people that are going to enroll in the high deductible plan, we need to make sure we get your information over to Optum so we can get your cards to you by the end of June. And then last but not least, this is a benefit that we actually rolled out at the beginning of the calendar year. It is called the Benefit Resource Center, or the BRC. This is actually a service that's available to you and your spouse and your dependents that you can use to call or email, right down here at the bottom, and ask benefit questions. Maybe you want to understand a little bit more about the difference between the green plan and the high deductible plan. Maybe you got a bill in the mail and you're not sure if you're supposed to pay that because it doesn't match up to the explanation of benefits that you received from Highmark. Maybe you just have an eligibility question that you need answered. Or maybe you have a question on the dental insurance. This is there to help you. They're there to help you through your question, to help you resolve your issue. And they'll take that off of your plate and get that resolved for you as quickly as possible. The only time that you don't want to call the BRC is if you have questions such as payroll questions, or maybe something that's coming out of your paycheck, or HSA contributions. The BRC is not going to be able to help with that type of stuff, so you are still going to have to reach out to the HR generalists at the district. But this is available to everybody to use. We did just run a report recently, and it seems like a lot of people have been using it, which is fantastic. We want to continue to push you toward this other resource that's available to you. And then that's all that we have. Does anybody have any questions? Yes. Okay. Yeah, that's something that we'd have to look at in HR because they're the ones that make that elections. So did you reach out to the HR generalists at all? Okay. Angie. Yeah, we'll make sure that that's corrected for you. Yeah, so things like that, if that comes up, make sure you reach out. If the BRC can't help you, they do reach back out to us, and we'll work with HR to get it fixed for you. Any other questions? Thank you, everyone, for coming. At least we give you some time to enjoy the day. It's so nice out today. And don't forget to make your elections starting on Monday. Okay? Thank you.